tokenization of real-world assets, or RWAs, has caught the investors' fancy despite bearish market conditions. Switzerland's largest bank, UBS, launched a trial of tokenized money market fund on Ethereum last week. From gold to art to securities, any and all kind of assets are up for tokenization. Forkast Mahashal looks at the tokenizing potential of real estate in the first part of a series that looks at placing real-world assets on blockchain.
Economies across the globe are embracing tokenization. But what exactly does tokenization mean? It's the process of digitizing and representing assets as tokens on a blockchain, and anything and everything it appears can be tokenized, from financial products like stocks and bonds to physical items such as art and houses to virtual assets including carbon credits and intellectual property. But why do we need tokenization? It creates a granular virtual investment vehicle on the blockchain, which can then be traded on digital platforms. According to a report by Boston Consulting Group, the market for tokenized assets could grow to $16 trillion by 2030.
So you can see Fidelity, Franklin Templeton, BlackRock, KKR, and some of the sovereign wealth funds and investors in the area that you're living in are thinking deeply about how actually to make these markets accessible and more efficient when investing. And certainly blockchain will enable this kind of infrastructure to be much more efficient, much more transparent.
Bernstein estimates the size of tokenization opportunity to reach $5 trillion over the next 5 years, led by stablecoins, central bank digital currencies or CBDCs, private market funds, securities, and real estate. But why are institutions interested? The answer: increased liquidity.
Now we're at a point where the crypto scene has become so large, they're actually wanting to leverage that liquidity. So liquidity, the access to global crypto liquidity, has been another huge factor in the reason for that level of interest in RWA tokenization from traditional financial institutions.
According to experts, tokenization brings many advantages, including cutting down on middlemen, faster transactions, increased transparency, and in the case of real estate, opening the market to a wider pool of investors. Let's take an example. You want to buy a condominium or an individually owned residential unit in a building. How would tokenization help?
I'm really talking about tokenization of each little condo in like being in the land register. Then it will basically mean I can invest 100 euros at the end of the month in a particular tokenized asset class, in a tokenized asset of this particular condo. So I can make a monthly payment, I can make an upfront payment, I can share the ownership with hundreds of other people. If I want to sell it, I do it within seconds. Fractionalization first. Second, as soon as fractionalized, it opens up a much bigger market. So it brings much more liquidity and a third, it also makes it much more international.
So what are the pain points in real estate?
Look at the housing market, our real estate. Yeah? So very illiquid, expensive to exchange, not possible to get a super small fraction of this asset class, and so on and so on. So there are problems, so to say, that are just waiting to be solved.
Illiquidity and housing bubbles are ranked high as challenges facing the industry. However, tokenization is still in its infancy stages and lacks regulatory clarity.
When you think about fractional ownership of real estate, we really have to go back to each individual jurisdiction where this is anchored. Let's say a 10th or a 30th of a very expensive building that I purchased a certain share of with a tokenized instrument. How can this ownership be claimed? How can it be enforced? Which then needs to be rooted in a legal concept that is valid in the real world.
And coming up with rules is not easy.
What the law has to do is think of some way to ensure that when, say, I transfer a token to you, and we both intend that transfer of the token will be mirrored in the real world with the transfer of the real thing, the law has to find a way of making that the case. And that's actually, in some ways, incredibly difficult.
Tokenization holds the key to revolutionize the traditional financial system and create greater liquidity. And we are just getting started here. Mahasha, Forkast.